Yes, I think that OPEC will need to review these projections more than once. Today, we are talking about variables controlling these projections and forecasts, which is the stability of economic growth in India and China, as well as the economic trade war started by President Trump. Where will it lead to? Will it influence the global economy? This is expected with the tariff imposed on different commodities and on different states. Now, regarding the Federal Reserve plans to lower the interest rates, if these plans take place, this will influence the global economy and will reflect the OPEC projections.
Now, Mr. Amer, how significant is the role of air and road travel in driving demand growth, and could geopolitical or economic factors disrupt this trend?
Yes, the demand on traveling in the summer is more than usual, and we're talking about transportation, which is now 65% of global demand on the oil. 65% of the global oil goes to transportation, whether air, ground, or sea transportation. Also, with the Trump steps to lower the dependency on green economy and is directed more to electricity transportation and AV vehicles. These vehicles will depend on fossil fuels more.
With the United States and European Union pushing for energy transitions, how sustainable is OPEC's long-term demand outlook beyond 2026?
I think it's different between the OPEC forecasts and the Energy Agency regarding the peak oil demand. OPEC expects that the peak will continue after 2045, but the Energy Agency projects that the demands on oil and gas will be in peak by 2035. There's a lot of differences in the findings and projections of the two agencies on how the world accepts the green transformation and also the preparedness to have the alternative to fossil fuels.
Now, Mr. Amer, the International Energy Agency warns that Washington's latest sanctions on Russia and Iran could disrupt global oil supply chains. How do you see these sanctions impacting market stability in the coming months?
I think that the new Trump administration is keen on not imposing restrictive sanctions on the Iranian oil, which is evident recently. They have restricted the sanctions on the Iranian oil imports, but we are starting to see a solution to the Russian-Ukrainian crisis, which will be a beginning to solve the Russian oil problem, which was and the Ukrainian oil which was surrounded by the Russian forces. I think the sanctions on Russia and Iran will mean lowering the supply in the markets with the big reserve at the OPEC. OPEC will be able to provide an alternative for the Iranian oil.
Now, the Russian crude production edged up despite these sanctions. What potential workarounds do you think Moscow might be employing, and how effective are these sanctions in curbing Russian exports?
These sanctions had a great influence on the Russian imports regarding in terms of price, the Russian supply in the markets, and also in terms of controlling the shadow fleet of Russia. All of these are factors that impacted the supply in the markets. Also, the sanctions impacted the exploration processes and searching for oil and oil production in the Russian interior. That's why we have witnessed a decline in oil production for Russia, which is for 0.4%, which is less than expected.